Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, December 26th, 2022. Well, hopefully everybody had a really great Christmas. And as we look forward into the last week of 2022, it actually could go in either direction in terms of the intensity of what position squaring and just finishing business for 2022 will entail. I think that we could have solid periods of buyers moving in and doing what they need to do, and possibly even the same firms coming in that again, then doing the sell side of what they need to do to get themselves together for the end of the year. Now, on an Elliott basis, I am beginning with the NASDAQ here on the hourly chart, but just to do a quick overview, I continue to count this as that we are in a primary C wave down. There's primary B, so we're in a primary C wave down. And primary C will consist of 5 waves of intermediate degree, numbered or labeled 1, 2, 3, 4, 5. So far we have intermediate waves 1 and 2 as complete. And that would put us in the beginning stages of an intermediate third wave down. And we're basically kind of in that position where we could be in an area where we could rise up and then drop strongly. So we could really spend the week, Tuesday, Wednesday, Thursday, Friday, spending the week bouncing, but in a narrow range, ending a little higher, and then beginning the new year with the resumption of the downside. So again, now, quickly, I just want to give some reference to the alternate view, which brings the A wave out to here, the primary A wave out to here. And what we're remaining in is a primary B wave counter trend rally. Now, I'm still getting feedback on this, and people are still kind of with it, considering this is wave A and this is wave B, and now they're looking for a C wave up. But again, at this stage, the power of what that C wave up could mean is that we could get ourselves up and above this high, which is 13,740. And put in a C wave. Is that possible? Yeah, it is. And it would be not only a good kick to finish 2022, but it would likely roll over into 2023 a little bit. Now, that's the part that I think, in terms of what we have going on, it would be momentary. It would be something that could happen, but I'm not looking for it to build and to keep going and keep going and keep going. The energy might be there, and the energy is going to get there. It's going to reach its high, and boom, something will turn it right back over, and we'll drop into a C wave, which will be destructive to the downside. It will be destructive. It will knock everything just right out of the ballpark. But there is the possibility. We do have that potential. So the alternate view is the A wave. The primary A wave is here, and we remain in the process of putting in an ABC structure to form primary wave B, which would be moved over. Okay, well, right now, my preferred view is that primary wave B is done. We're in a primary wave C. We've done 1 and 2, and we may go up as I'm going to go back down to that hourly chart. So we may go up if I'm pushing down. So again, made a slight change. This was presented, and I carried it through last week, where I had originally put wave 1 here, wave 2 here, and then sub 1 and 2. And I've kind of walked that back a little bit to allow for this additional upside. And how that's all remained possible is just by using the count where we have minute 1, 2, 3, 4, 5, minor 1. And again, hats off to the subscriber who actually gave that to me. So this is how they were looking, what I thought, and I responded positively and basically carried it with me. And now I'm going to let it be, because I do feel that the market will find its way higher. And so what we need to look for, let me just put it up there, because I'm not looking for a lot here. So let's be clear. I am not looking for a gigantic rally, but a rally that could take us Tuesday, Wednesday, Thursday, Friday, or within those 3-4 days. Bigger moves and still have downside, et cetera, because nothing goes straight up or down. But from here, what we'd be looking at, if it's the minor two, there's wave A, wave B, and now we're in that C wave. And what could that C wave do? Well, it has the potential to get back up to here, right? I can add one more layer, one more quick layer for this particular count, right? I can add the fibs. Indeed, if this is A and B and we're looking for that C, let's just see. Again, this is just considering that these highs and lows are in. So this is A of 2, B of 2, and we're in C of 2. Where do we have overlap? Right up here. 13,000, excuse me, 11,369, and then 11,451, 31 to 51. That's the double. A 382 for a minor wave 2 works. Plus we get the double of what that C wave would look like. Now, yes, I have said before, and I continue to say that most often a wave 2 has the potential to take us to 50% retracement to 62% retracement. But we've got a lot of overhanging negative still in the market. We've got interest rates. We do have inflation. There's more that I want to add, but I'm going to wait until actually the next weekend. So for the introduction to the new year, I guess, it'll be in the podcast, and it's going to be on what's really happening behind the scenes with interest rates, inflation, and how the government continues to inflate things, and how they're doing it because they got these huge packages that we have to pay for. And it's not a political thing. It's not a political game between one or the other. It's just something they have to do. Without it, a lot of things will just fall apart. So right now, we're still working on funding things, and it's coming through us. So you can go all the way back to the bottom line. It comes from retail to corporate to all the way back up to where it actually exists. All right. So, but in any case, we do have that strong potential that this what could happen. Right now, we just opened in Globex, and we are opening higher. We're up about 60 here in the NASDAQ, and the S&P is up about 16. Dow up almost 100. So it continues to fit what we can look for. So again, that overlap 11,400 is not that great of a stretch, and it's 300 points from here, and it could be over a couple of days. Does that revert the whole picture to bullish? No, not at all. Does it really change anybody's thought pattern on what could happen with interest rates? No, not at all. What we got going on is going to be where these are year-end positions and positioning, getting out of what they don't want, getting into what they do want for 2023. So there's a big rotation. We're seeing it in the bonds. We're going to see it all over the place. And all the counterparts will react as, say, for example, as dollars are needed or not needed. You won't be exchanging dollars, but if you're taking you need dollars to go buy equity, or you need dollars to go buy bonds, or whatever the situation is, well, you step into the market, you do it, and then we get a reaction within the dollar index. Right now, I don't see, we may have some news during the week in terms of, I will look at that probably tomorrow morning on what could be coming next week in terms of economic news. Because I would imagine that just because it's basically the last week of the year and et cetera, that they'll hold off on news. No. So what we have is on the 27th, International Trade in Goods. So tomorrow morning at 8:30 Eastern, International Trade in Goods. Jobless claims on Thursday, and that's really it. So it's a very slow week. We'll start the new year with some shebangs. But so can be quiet in terms of that type. There won't be the economic fill. We still have some hot spots around the world that could dig things up. And so, but in the retrospect to what the market really can and can't do, I think it's really going to be built around just this year-end positioning. And what I'm hoping for, to be honest with you, is that it's very directional. Now, I don't care if it goes up or down, but that it's directional in its nature, and that so we get an hour or 2 or 3 hour rally where the consistency is to just take it to the upside. Makes trading as a day trader extremely easy. But if we're going to get where we're going to have these fits and starts and jam it up and jam it down and jam it sideways, and it makes it more difficult to put a position on and want to leave it there. So, because you always have to work with a stop, etc. So directional, I'll take. And to be honest with you, if the direction is going to be down, I'd like to first see this minor wave 2 complete. Then I'm going to be more in tune with, yep, we're ready. And we're going to do a drop. Now, so again, for tomorrow here in the NASDAQ, I would be looking for it to continue to go higher. But right now, it's not off to tremendously great shakes. Yes, a little bit of an upside coming, but it has to build from here. We now need to get above Friday's turn and Friday's high, which is 11,143. We've got to 11,039, almost 11,040. So we're almost there. If we can get up and get above it, all the better. And continue to move higher. Resistance levels now coming in. We have 11,181. We have 11,216, 11,285, 11,339 or 340, and that happens to coincide with the hourly 200. So I could probably open this up a little bit. I apologize for not making those bigger so we all could see it. Let me go over that again so you can see where we are. First, we got to get above there, which I think we will do. We got very close. We have 11,181, 11,216, 245, 285, and then 618, which happens to coincide with the hourly 200 period moving average, and that's at 11,340, I'm going to call it, to 350. And then we have a little other treat right above it at 11,370. So that level could meet up, finish this, and turn it lower. Ultimately, we have the secondary pop, and that coincides with the larger minor 2 in its entirety, would meet 382 resistance at 11,430. And then we have at 11,450, one more fib for the C wave. So all in all, I'm looking for the upside. If what's going to tell us that it's not going to do that, if it gets up here, puts in that new high above there and fails, it's going to fail cleanly. It's going to fail quickly, in my view. I don't think it should just get up here and turn and just wobble its way down. That leaves all the doors are open for upside to come in. But if it's going to come up here and something happens, which is going to kick the market into action, then I believe it'll drop. Otherwise, I do think that the buyers will, keep in control. All right. So over in the S&P, it's the same story. And again, I moved it down. So what we have in terms of, we're still in an intermediate third wave, completed minor wave 1, and that would have been at Thursday's lows. So Friday was the beginning of a minor wave 2 rally. And to be honest with you, even in the other count where I had the 1 here and this was the 2, that still holds. This could be sub-minute 1 and then sub-minute 2. And then we're dropping in the 3 of the 3 and all the way up. And it should be fast and it should be quick and it should be strong. That would be that count. But I feel that because we don't have any economic news that's really going to come that way, we do have geopolitical things going on that could change the whole picture quickly. So I just think we're going to be subject to the rotations between sectors, between many things happening across the board. Okay, So let's start by putting up where the S&P can finish this a little bit larger minor wave 2 from what I was counting. So the preferred count now, moving that down, calling that 1. The other one's still there, but it's kind of like secondary preferred right now. All depends on what happens from here. So, but right now, putting the 1 there. Where can we come in? 382 comes in at 39, 37, 39, 38. We can call it all the way up to 40 if we need to. All right, so we can got that. Now we can get a little clearer. And then above that, we have the 50% marker at 39.85. Now, there's been calls that some are thinking that there's going to be a squeeze in the spiders are going to get up to 400. Equivalent approximately would be 4,031 in this index. Can it do it? Yeah, it can. Quite the move, actually. It's going to have to generate a lot of push power. And there may be sellers out there like, no, you bring it far enough and then we have to. We will sell. So again, it depends on what actually happens. If this goes real quick, and then now we get this, they're done with the buyers and the sellers come in and it reaches that level and starts to come down. Well, then as long as the structure itself is telling me, then we might be moving into that minor 3 of intermediate 3 type of a move. And that is the strongest part. So we'd be looking for something to really take over and push. Now, let's add to all this, if we're inside this whole move, again, on the basis that it's in the minor wave 2, and this is the small a and the small b, and we're in that C wave, well, then we're going to add from here to here to, and it came, well, why did it do that? All right, let me just remove that. All right, so let me go back over here and put this back up so it knows that I'm looking for it. Come on. To there. There you go. To there. So we see here, we also have overlap up here at the 382. So again, 39.32 to 39.40. And then we have 39.50 to 60. And so, yes, I think that the S&P could reach 39.50 or 39.85. And then again, we have some overlap up here above 4,000. And it could do it. It could do it very quickly if it needed to. It's also going to be, what's going to be the strength in the Dow, because the Dow is going to have to follow through. And the Dow is the one that carries the largest potential to kind of just really get up closer to its all-time highs. And I know that that's going to sound really weird coming from me, since I would not intentionally be looking for something like that. But the last time it did it was 2008, 2009. And you can go and look and you can see what the result was. So if they're going to do it again simply because year-end posturing dictates that, that's what's going to happen. The potential is there, no doubt. Am I expecting it? Who knows? Literally no. But even if it does, it's not a new bull market. It's nobody's wrong calling for a strong downside. All the rest of the noise that I hear, that everybody's going to hear, it's just that noise. So the market will turn, and the market will come down even harder should it do it, i.e. go look at what you got to reference, and that is 2008, 2009. And what was going on during that time, that the reality set in, and the reality was in mortgage loans. And the writing was on the wall, everything was there, people were positioned. And then, of course, it happened. And it was failure after failure, and they were big failures. So are we building to something like that again? I don't know. Is it possible? All things are possible if you think about it. But right now, for tomorrow, back down here at the ranch, for tomorrow, I'm looking for the S&P to continue to move higher. First stop, I think, is going to meet some resistance at 3,900. We have the hourly 200 sitting right there. We've got where this is 100%, where wave C would equal wave A, and that's at 3,900. but I'm kind of be looking for it to probably come above here. But it could, if we can get a clean 5, which I would think maybe it would not be. But, and in any case, that's resistance. Next above that, 39.20, then 39.32 to 37, we'll call it 40. And now we're up at the 382 level. Perfect. And then 39.50 to 39.60. That one to me really sticks out as being a very probable place for the S&P to get to before it turns. Does it have additional potential? Yes, I've just showed you. It does have additional potential, 39.85, 4,000. And it could get its nose above 4,000. So it's there. Again, it does not change it, does not change it at all. What comes next is going to come next, and that is a pretty hard downward bias. So that's basically where I'm going to stop for today. I did do the podcast, iStorm podcast, which gave that larger picture and tied a lot of things in between the bonds and currencies and interest rates, and which are the treasuries, and of course the equities, the indexes. So now individually inside of all this, folks, please understand that in the back of my mind, I'm thinking to myself, I don't think that Apple's going to end well. I think Apple's got some potential problems. I know that they do have, unless there's going to be the short squeeze, and the short squeeze could come in Apple. They could get a short squeeze going in Apple. I will say that. But again, it's depending on how those shorts are being hedged, if they are being hedged. So we could have some fireworks in here, but I think that comes more as we head towards Friday, because guess what Friday is again? It's an expiration, and it's the last expiration for 2022. So it's all going to depend how they all want to end the books. Well, how they want this on the books. So this is why I think, yes, we could see fireworks in both directions. Okay, so for tomorrow, I'm going to look for the upside to continue. And we have our markers, we have our resistance levels in both. Moving averages, right now, they're kind of like, they'll catch up. If this rally does continue, they will definitely catch up and continue and turn and move higher with the market. They all basically have already, and I suspect that that will continue. Oops, you're going to see it right there. They are turning. The 50 is beginning to turn. The 200 is still pretty flat, which brings us to 3,900. That's why. Flat 200 doesn't mean it can't pop above it, but it doesn't. I don't think it holds. If this was turning and starting to go move higher, then he's got a much stronger chance. And depending on where these will be, much stronger chance. All right, going to end it right there. Our next update will be on Tuesday, 27th.